Hi there, welcome to Kneppy Invest and welcome to another technical update video. Before we get to all the exciting stuff, the whole reason you've come here to look at some charts, happy Father's Day to all the fathers out there, including my own father, of course, and also to Jeff McDonald from Albury. Now, Jeff watches my videos every single day, even when he's overseas. He has even coaxed his daughter and partner into watching my videos. So he must be a master salesman to get people to watch a video with my ugly mug on the screen. Anyway, Jeff has been unwell for the past few years. So hopefully today his family has spoiled him rotten and his day has been full of smiles and joy. The other thing I should mention is my video yesterday, the answer reply video, was the very first video ever on this channel that I forgot to put a thumbnail. Yes, sometimes I don't do things, and that was the first time I've forgotten to put a thumbnail. I have corrected it, but it does make a difference. I was told that before I started doing videos on this channel, do thumbnails because they do make a difference. And I saw it and I went, oh, it does make a difference without and with a thumbnail. Anyway, so let's get to this video, technical update video. I'm going to go through and do exactly what I do in all these technical updates. Go through indices, go through commodities. We'll have a look at bonds and cryptocurrency, and then we'll have a look at some individual companies' charts. I think I have 10 that I want to go through. And if I remember correctly, yes, all 10 of these charts are companies I don't own. So something unique about all these 10 companies. A few of these companies, in fact, one of these companies I have never had a look at before, but I just saw the chart and went, oh, interesting. So hopefully you might find it interesting as well. And if you do own this company, maybe you can tell me something about it because I have no idea. Well, I do have an idea what it does because it's in their name, but other than that, no idea. Okay, so let's start looking at indices, and we'll start off with the XJO. I could just start off with the XAO, the All Ordinaries, but for some reason, when I started doing this, I just started with the XGO, the ASX 200. And funny enough, I do prefer companies outside the ASX 200, so the Ordinaries would be probably a better one to look at. But to be honest with you, they're fairly similar. So this is the XGO, and if you look at the XAO, the Ords, there's not much difference between the two. So they're almost identical, to be honest with you. And I might have said, to be honest with you, a few times already. Anyway, the most exciting thing about the Australian market right now is we're almost or quite close to all-time highs, even though there has been a fair bit of negativity out there, pessimism, talk of recessions over the past month or two. We're near all-time highs. But don't forget, when the market crashed during the, or just before, or during the COVID-19 financial panic, it was at all-time highs there as well. Now, I do still think that if we do move into recession and we do see a bit of a bear market, it's going to happen gradually. It won't happen like the COVID-19 financial panic, where the XGO fell 4 weeks in a row, fairly large drops, and then there was a V-shaped recovery. We won't see that. It'll be sort of, we'll see the markets roll over and then move into a bear market, and who knows if that's going to happen. And if it does happen, the bear market may play out over a year or 2 years. Just don't know. They're all different. But the main thing right now, we're near all-time highs. In fact, the XGO has risen 3 weeks in a row after that negative week 3 weeks ago or 4 weeks ago. And we are at or near, not at, we are near the top of the trading channel, which means there's probably a little bit more likelihood we might see weaknesses or weakness in the market moving forward. But that's just saying it's more likely. It's not saying it's going to happen. XSO, much weaker. Small caps, small ordinaries, I do like this space. But the companies featured in the small ordinaries are not my favorite type of company. So we do include, or they do include, some larger companies. I'm pretty sure Flight Centre is in the small ordinaries. I'm pretty sure that is true. but don't count. Don't trust me when I say that. For some reason, that just popped in my head. That Flight Center is in the small caps. That for me, Flight Center is not a small cap company. And there's were other few. I did have a look at the small caps or the small ordinaries quite a few months ago, and I was surprised about some of the companies in it. I don't think it was via market index because it. Where is it? Because if I remember correctly, this didn't have any companies in it. Yeah, doesn't have a list of companies in it. So I found it from some other source, and I was surprised by some of the size, some of the company's size. This is I'm just rambling on now. Okay, so let's move on. Since I'm rambling on, that's a good sign for me to move on. Anyway, small caps or the small ords, it's just doing nothing right now. In fact, it's just been going sideways for about, we'll say about 5 or 6 months. No trend at all in the small ords. And I think I've mentioned this a few times. We're well short, or the small ords is well short of the all-time highs, which were reached back in 2007. So we're still seeing a fair bit of weakness in the small caps. And not only that, the XGO has been up the last 3 weeks in a row. The small caps, or the small ords, in fact, has been down the last 2 weeks. So all the money has been piling into the bigger companies on the ASX, not the small caps, over the past 2 weeks. Okay, so let's move on to the ASX, or not the ASX. Let's move on. We've just finished the ASX. Let's move on to the American indices. Now, I am in between 2 night shifts. I did go to bed at about 8 a.m. to try to beat the heat, and only about 2.5 hours sleep. So if I am not making sense, that's my excuse. Although it's never good to make excuses. Always own your decisions. Take ownership of your decisions. And I suppose that was a decision of mine, is to record a video on 2 hours sleep. Anyway, so let's get to the American markets. And Nasdaq was down. Yes, the Nasdaq was down. In fact, if I had to choose between the Nasdaq right now and the Dow Jones looks better. We'll look at the Dow Jones in a second. But the Nasdaq was down 0.74% for the week, and does look like it's trying to roll over, sort of like what we saw back in March and April. And if it does roll over here, that would be negative because it has not got above the highs we saw a few months ago. So interesting with the Nasdaq. It's still in a long-term uptrend, but just possible here, just saying it, sort of what we might have seen back in 2021, where the Nasdaq did move into a short bear market. So I think next week could be quite important for the Nasdaq. If we see another down week, who knows? This could be a little bit more further downside, and then I'd be buying off 17,500. But if we have a good up week, maybe it can get above 20,500 and stay above there. So let's move on to the Dow Jones. This one's looking a little bit better because it's at all-time highs. Yes, the Dow Jones Industrial Average is at all-time highs, and this does look a little bit better than the Nasdaq. And the whole reason behind that is because it's at all-time highs. Nasdaq is not. And the other thing is the Dow Jones has been up 4 weeks in. Well, actually, that's not technically correct. 3 weeks in a row, because 4 weeks ago it was actually down, but it was a green candlestick because the Dow Jones actually rose during the week. Yeah, from open to close, it actually rose during the week. But from the close the previous week, it actually fell. So it was down 0.6% on that week, but actually went from, it did rise from the open, not the close, the previous week, if that makes sense. So the Dow Jones looks pretty good. Now, I did have a look at the makeup of this particular indice quite a few months ago, and there is a little bit of a crossover between the Nasdaq and the Dow Jones Industrial. For those, in fact, let's do it now. Dow Jones Industrial. I think the reason I did this, I just want to see the companies in it. So there's 30 companies in it. Yeah, there we are, 30 constituents. And makeup. Oh, there we go. Dow Jones sets new record high before retreating on Friday. Constituents. There we go. I'm pretty sure Apple's in it. Apple's in it. Hopefully Wikipedia is up to date. So there's Apple, Amazon, yeah, Amazon. In fact, most of these companies you've probably heard of. 3M. I've actually am a shareholder of the 3M, American Express, Amgen. So one I don't know much about: Amazon, Apple, Boeing, Caterpillar, Chevron, Cisco, Coca-Cola, Disney, Dow. If we go on and on, Honeywell, don't know much about that. Apparently it's a conglomerate. IBM, Intel. Yeah, most of these companies are fairly well. There's Microsoft, Nike. So there is a bit of a crossover between the Nasdaq and, in fact, they've got the indices here, exchanges here. So there's actually 1, 2, 3, 4, 5, 6, 7 companies in the Dow Jones Industrial that are listed on the Nasdaq. So there is a bit of a crossover. Anyway, let's move on to the Russell 2000, which is a small cap index here. And this looks a little bit better than the XSO, or the small orders for Australia. A little bit better, but not quite as good as the Dow Jones and the Nasdaq. And this is a common theme, that there's more strength in the bigger companies in the world, the higher quality bigger companies in the world, and the small caps have been suffering lately. Although when you look at the weekly chart for the small cap or the Russell 2000, it's actually in an uptrend. I'd like to see it get above 2,300 to really confirm that uptrend. But yeah, it's in an uptrend. It broke out just towards the end of 2023. So go the Russell 2000. Looks quite a bit better than the XSO. And remember that, what was it, that rotation from the big companies into the small caps? That happened about a month and a half ago, 2 months ago. That's still, I think, at play. So if you just take away that one down week, where that rotation seemed to come to a sudden end, the Russell 2000 has had a few good weeks in a row. Yeah. In fact, the past week it was down by 0.05%, so a flat week. Let's move on to some international indices, starting with the Nikkei, and we can see a sudden V-shaped recovery in the Nikkei over the past few weeks after that yen carry trade that everyone's blaming for that little blip in the world's exchanges, equity exchanges, which I don't actually agree with. But anyway, a nice little V-shaped recovery for the Nikkei, but still well short of the all-time highs this particular indices saw just before that yen carry trade started to unfold. Hang Seng still in a bit of a downtrend. Yep, I'm still calling this a downtrend for the Hang Seng. And the DAX, all-time highs. Yes, the DAX reached all-time highs in the past week. And the FTSE, not quite. It's getting close to an all-time high. But the FTSE and the DAX both look pretty good. Both look pretty good. So most indices, in fact, look pretty good around the world. Of course, I have not looked at all of them, because that will take me 5 hours to probably do a video on. But they all look pretty good. Probably the weakest one would be the XSO. Yeah, small caps in Australia, XSO. Now let's move on to commodities, and we'll stay with the weekly chart. I'm not sure if I mentioned that. All these charts I'm looking at so far have been weekly. So we start off with gold, and gold looks beautiful, absolutely beautiful. You can see gold was in this trading, what do you call it, trading channel consolidation period for a long period of time. In fact, from August 2020 to the time it broke out, March 2024, it was consolidating, going sideways for a long period of time, and then broke out March 2024, and you can just see it's moved into an uptrend. That was the breakout. This is exactly what I look for in individual companies' charts, a breakout like this. And you can see what happens, particularly after a long consolidation period. The price can just keep on going up. A lot of momentum, a lot of buying. You just see the sentiment change instantly when you do see something break out. That's happened with gold. Beautiful breakout. You have to confirm the breakout because there was a false breakout in December, and even Ausbiz the Core, they were a little bit, I won't say late, but they kept mentioning gold breaking out like a week after it broke out. We had the false breakout. So be aware of false breakouts. It happened in December, but when he got confirmation, a pretty good confirmation in March, all bets off for gold. So gold's been a really good play since the start of 2024. One of the best looking commodity charts, maybe there. We'll see. Better than silver anyway. So silver, there should be a bit of a correlation between gold and silver, you would think. But typically, when you see gold rally like we have, it takes a while for silver to catch up. But this definitely does not look as strong as gold. I would say, well, I could be completely wrong with this. I could say that there's a little bit more upside to silver because eventually it will try to catch up, but I could be completely wrong. I've noticed iron ore is now back above $100. Now, I would say, just by looking at this weekly chart for iron ore, that it's more in a downtrend, particularly in the short term. Yeah, short term. It's more of a downtrend than an uptrend, but you just see the volatility in iron ore since 2020. Reached a high of about $230 back in early 2021 and went all the way down to $80 by October 2022. So a lot of volatility in iron ore. It does look like the volatility is starting to squeeze, starting to decrease, but still, who knows? I wouldn't be surprised to see a nice little rally in iron ore and then pull back, rally, pull back. In fact, I'd say there's no significant trend in iron ore right now, apart from a short-term weakness. That's probably also true for oil. I would say no trend in oil when you look at the weekly chart, just going sideways. You could even say maybe it's trading in a range between $65 and $95. I would accept that because it hasn't been below or above those two prices since early 2023. So no interest right now in oil. So there's quite a few oil plays out there. The biggest ones, of course, are Karoon, Santos, and Woodside. You notice that although some people have said to me, Woodside is more gas. I'm not sure the makeup of oil and gas for Woodside, but yeah, that's more gas. That company's more gas. And I do have gas here somewhere. Yeah, it's right next to oil, of course. And if you have a look at natural gas, yeah, it's remember that after the Russia invaded Ukraine, gas just went bonkers and went all the way up to, I don't know how to what's the units on this? MMBTU went up to 10. Now it's 2.125. So it's fallen a fair bit since those highs. I'd say more than likely the low has been reached for natural gas, which was in February of this year. It's more looking like it's trying to consolidate, go sideways. I've completely missed uranium, but I suppose they're in the same space. Oil, natural gas, uranium, all in the energy space. And this is uranium. In fact, a down week, which is not surprising because I noticed, I had a look at the the uranium companies charts, individual companies charts like Boss Energy. And remember that it was like a week ago when there was a little bit of excitement in uranium companies and a lot of uranium companies charts or share prices rose 10% in one day. A lot of those companies now are back below where it started before that little run. For instance, let's have a look at Boss Energy. Boss Energy. We'll have to have a look at the daily chart. Yeah, so this was on the share price of Boss Energy on the 26th, or the first day of the week. It rallied 7.6% on the day. Now the share price is actually below where it was the day before that rally. So that is a sign of weakness. I don't think all the companies or all the uranium companies are like this. I think Bannerman may not have fallen below. No, it has. There's maybe one or two companies that had not seen that signal, but all these companies' charts are in downtrends. So even though there was a little bit of excitement in one day, that excitement faded away so quickly, and you can definitely see that just in the uranium weekly. This is the spot physical uranium. Yeah, there was a bit of a down week. So that up week last week was because of Friday, not what happened last week. So uranium actually down. Was it 2.5% after being up 7.94% the previous week? Let's move on to lithium. Yep, no interest in lithium right now. Copper. Copper, it was looking really good. Flat this week, by the way. An absolutely perfect doji, almost perfect doji, up slightly. I don't know what to think about copper right now. If you look at the daily chart, not much signal right now. Nice little rally, but is this just a dead cat bounce, something like that? So, of course, if it falls below the lows back on the 8th of August, that would be fairly bearish. And then I'd like to see it get above that line right there, which is now a resistance line for copper. No, yeah, I have definitely not as strong as gold. I'm trying to think of a weak commodity right now. Maybe nickel. Maybe nickel's the weakest one. And we'll get to nickel in a second. Coal. I noticed a lot of coal companies on the ASX, their share prices have fallen a fair bit. Let's go back to weekly. So I'm wondering if coal has fallen. Yeah, coal's fallen the last few weeks. And I just noticed, if you have a look at some of the coal companies, Whitehaven Coal has dropped, the last 2 weeks has dropped 5% each week. And it's getting to an interesting level. So the lows this company saw back in March were about $6.30. So it's getting very close to those lows. And in fact, share price of this company has dropped from $9 to $6.69 fairly quickly since the start of July. Same signal with New Hope. Yeah, it's dropped, suddenly dropped, getting to also interesting levels. Well, don't forget, Yancoal decided to suspend their dividend for 1/2, maybe not for the whole year. I don't know. I can't remember. And of course, Australians are obsessed with dividends. So the share price fell a fair bit, which could lead to an opportunity to buy this company at much better value. I don't know. It's up to you. You can see the massive volume coming in as well. So it looks pretty weak. Anyway, let's move back onto commodities. Tin. Have a look at the weekly chart for tin. Not bad. Not bad. Has the potential to be in an uptrend, but again, I'd like to see it get above those old highs we saw back in May through to July. So it needs to get above that for me to really confirm an uptrend for tin. I'm trying to think of some tin companies on the ASX. I'm pretty sure Metals X is one, and I can't think of any others. Metals X. I'm trying to think if Metals X is a pure tin play, or if it's just one of the commodities it does. And it's according to market index, tin and copper. I'm pretty sure tin would be the more dominant, but I could be completely wrong. So it's tin and nickel. Yeah, there was a nice little rally in nickel. If you look at the daily chart, I can't see it here, but if you look at the line chart, nice run in nickel, got to a high back in May and has fallen back down. So pretty weak nickel. Let's go back to the candlesticks. And Palladium, still in downtrend. It's been in downtrend for quite a few years. And weekly chart suggests the downtrend is not coming to an end. Although, if you do go back to the weekly chart, it has risen the last few weeks. So 4 up weeks in a row, but that does happen on occasion. Yeah, we saw it rise 4 weeks in a row back in March 2023, so it can happen. And even though it's risen 4 weeks in a row, those rises have been fairly weak. So we're talking about rising 0.76, 1.21. Actually sounds much better saying it, 4.32 and 1.74. Yeah, it's much better than it looks on this. So if we go to the daily chart for Palladium, yeah, it's had a nice rise from the bottom we saw in start of August. There we go. But still no end in the uptrend at full play. I'm not calling it. Maybe a double bottom though. We put a line right there. There's 2 bottoms. Yes. Or maybe even a sort of, not quite a sort of reverse head and shoulders, but almost. No, wait there. No, it'd be wrong. You need this to be lower than this line here. So it's more a double bottom. So forget everything I said about reverse head and shoulders. The low here back in June needs to be lower than the 2 other lows. And let's not talk about cocoa. Okay, so let's move on to Bitcoin. Just having a look. Bitcoin now is below 60,000. And we'll stay with the weekly chart. So it's been trading in a channel for about 6 or 8 months. And whenever the price of Bitcoin gets below the bottom of that channel, you can be able to see this when we look at the daily chart, we have seen some strength in a Bitcoin. So that was a good time to be buying back in the start of August for Bitcoin. Remember, Bitcoin also fell a fair bit during that weakness in the overall market. And I would say there was quite a few people probably selling Bitcoin at that point because they were a bit fearful. But the whole point of Bitcoin is to maintain value of your wealth or that sort of thing. Store of value, that's what it's called. But I don't really think a lot of people consider Bitcoin in those terms as a store of value. Anyway, and Ethereum, if you look at the weekly chart for Ethereum, it's definitely weaker and it has fallen through a support level. So I'd say Ethereum is a little bit weaker than Bitcoin, but that probably makes sense. I'd assume if there was one cryptocurrency people were going to buy, more than likely they were going or will buy Bitcoin over Ethereum. That's just the way I would view it, particularly those who may not think as highly as on cryptocurrency as other people. So there are cryptocurrency nuts out there who have put all their wealth into crypto. I know one person who's done that. I'm not going to talk them out of it. It's not my place to talk people out of doing stuff like that because I could be wrong and they could be right, and that would make me look like a fool. And I don't have the conviction that they're going to be wrong. If I knew 100% they were going to be wrong, I would say something. For instance, if someone said, I'm going to put all my money into Mosaic brands, I would say, oh, yeah, I would not do that. It's one thing I would not do. Sorry, Mosaic brands. Okay, let's go have a look at bonds. And bonds, bonds has rallied the last week. Let's go back to the weekly chart. Nice little rally in bonds. What's happened? Bonds has rallied 2.61%. So maybe I think there will be some interest rate cuts in America this year. I'm pretty. It's not a good thing to say you're 100% certain something's going to happen. So there's a good chance there will be interest rates cuts. There will be interest rates cuts, or interest rates will be cut. Maybe the market is saying, or the bond market saying, maybe not as many as originally thought. So a nice little rally in bond yields, which means bond prices have actually fallen. So don't forget, bond yields and bond prices are inversely related. In fact, if you do listen to, what is it called, Fear and Greed, they did a bond explanation a few weeks ago. They explained it pretty well. They explained it absolutely well. I'm pretty sure they did try to explain the correlation between bond yield and bond prices. Bond yields go up, bond prices go down. Yeah, anyway, let's move on. Actually, I'll just have a look at currency first. How's currency doing? Let's have a look at the weekly chart for currency. And I'm thinking of going overseas to the United States, maybe August, September next year. And I would love to see the currency go on a rally. Love it. Don't know what I'll do here. Would I exchange my currency into American dollars right now? I don't know. Probably not. Probably not. Particularly if America lowers interest rates and we don't, hopefully we will see Australian dollar rally because I want more parity if I am traveling. That's me just being a little bit selfish. Okay, so let's get to some individual companies' charts. I'll actually look at daily charts for these instead of weekly charts. And I do have 10 companies here. Some of these companies are looking interesting for different reasons. I'm pretty sure one of these companies is looking interesting because it's weak. Actually, no, not really weak. It's just this company has shown two really long consolidation periods. And it's sort of proof that just because the share price of something is going sideways doesn't mean the share price will break up to the upside. You also have to watch out for the breakout to the downside. So this company is included in these 10. Let's start with AMA Group. Share price has been in a downtrend for a long time. I do think the bottom has been reached. And when I say downtrend, I mean a long time. You could even say that it's been a downtrend since before COVID-19. There was a time here where it looked fairly positive in November 2020, but definitely since March 2021, share price of this company has been in a downtrend. There's been times when it's looking promising, back in early 2023. Looked like it was trying to turn positive. So just keep that in mind, that at times it's starting to look positive, but it did not really move into an uptrend. There wasn't a change in sentiment. We need to see that. I need to see that. But it's starting to look promising again. And it has fallen a fair bit lower than when it last looked promising. And the share price then was around about 15 to 20 cents. Now it's 5.5 cents. I do think the bottom has been reached back in October last year, and share price then was about 3 cents. But just looking at this chart, share price, I think, is trying to move into an uptrend. So the share price got to a high back in July, 24th of July, so it's not that long ago. Share price got to a high of 5.2 cents. Now it's 5.5. Now, there was a little bit of selling in the last trading day of the week, so a little bit of weakness there. So I need to probably see a little bit of proof. I think there was a little bit of weakness because there was a high here back in May. Yeah, you can see there was a little bit of selling there when the share price got to that level. So that is a resistance level for AMA Group. I would be a little bit more excited about this chart if I saw the share price get above that level, which is about 5.7, 5.8 cents. But it is starting to look promising. It seems like it's wanting to move into an uptrend. And probably the other thing I should mention here is volume. So volume is quite important. It's telling us that there are participants in the market getting excited about this company, buying shares in this company. And we have seen an increase in volume since the last low back in June. And noticeable increase in volume as the share price starting to move up. Just look at the volume in that period here. If you can see my volume, my mouse, compared to the volume. So look at the volume from the start of June this year to now. Compare that volume from December last year through to June. Much higher volume since June. So in fact, this should play out if you look at the weekly chart. Yeah, so really good volume the last few months. Not quite as high as this company saw back in September. I'm not sure what happened there, but there would have been some bad news, maybe a couple raising back in September last year, but definitely some nice possible bullish volume over the past few months. And if I do see the share price get above 5.8 cents, maybe the best price will be 6 cents. If I see the share price get to 6 cents, I think this could be a little sneaky breakout on the anticipation that possibly the company might release some good financial news. That's probably what the market is thinking right now with AMA. Okay, Horizon Minerals. This is a case of a share price in a downtrend. I have no idea about this company. I've never had a look at this company. This is just me looking at a chart going, oh, this is an interesting chart. Why not have a look at a company I have never had a look at before? So there's a few things why this is interesting. So share price moved into a downtrend back in June 2022. So it's pretty obvious what happened there. Well, maybe it's not obvious what happened, but something bad happened in June 2022. Share price dropped from about 12 cents down to 6 cents, so it halved in a fairly short period of time. And that was the catalyst for the share price moving into a downtrend. And the share price just kept on dropping and dropping and dropping. It's tried to start to move into a consolidation period back in late last year. Share price moving sideways, not a lot of volume as it moves sideways, which can be a good sign. So there's no interest from the sellers, or there's no interest from shareholders to sell. So then maybe they think the share price is too low for me to sell right now. And there's no interest in buyers. No one's wanting to buy. We saw a little bit of interest in May. Share price tried to go on a rally, but the volume was quite weak. You can see the volume was fairly weak on that rally. So that was always going to fail, in my opinion. And then the share price pulled back all the way back down to where it started. But at the bottom of that little pullback, we started to see expansion in volume, which is interesting. And then we saw a bit of an explosion in volume back at the start of August. And then we started to see share price maybe wanting to break out. So the main thing about here is the volume, just like AMA Group since the start of June. Well, in fact, it's actually from the end of June. We have seen a bit of an increase in volume for Horizon Minerals. Now, the funny thing is, if we didn't see this little rally in the share price back in May, if there was no rally, it just went sideways during that period, I would actually be calling this a breakout because I would have a line right here right there. Maybe not a breakout. I'd say this is potentially breaking out very soon. We've also had a crossover of the moving averages. Now, we could see more crossovers in the future. So just because you see one crossover, because we've had 3 crossovers in the last few months, just because you see one crossover doesn't mean it's breaking out or it's moving into an uptrend, but it's a positive side. So a few interesting things about Horizon Minerals. The only negative thing is if the share price didn't rally back in May, I would say in EMA's almost, I wouldn't call this a breakout, but say it's very close to breaking out. Universal Store Holdings. This is one of the breakouts during our reporting season. I like this sort of chart. Now, in fact, share price actually broke out before they released their results on the 20th of August. Share price rallied 5.8% on that day. And the reason I'm calling that a breakout is because there's this purple box is a resistance zone for Universal Store Holdings. It broke above that level on that particular day. Company released the results, share price popped up, and even though there was a little bit of selling on that day, share price has gone sideways. There's not much selling. That's a good sign moving forward. So there is potential that Universal Store Holdings share price could move into a rally from here. Now, that's all I'm going to say, just looking at the chart. Now, in my opinion, valuation matters. So I'm not sure about the valuation of this company. I'm more likely to take a position in a company like this, when I see a chart like this, if I think there's good value in the company, without even looking at the chart. So that's one of the decisions I will make when I look at charts. Do I see value? Do I not see value? So I haven't come to that decision with Universal Store Holdings, but if I see value in this company, this looks like a nice little play. The reason I think valuation matters is because if a company is actually good value or undervalued, there's more room for the share price to rally. But if the company is overvalued, then there's less room for it to rally, because if it's overvalued and the share price keeps on increasing, it becomes even more overvalued. But momentum can be quite powerful. You get positive momentum in a share price, and that momentum can last a while. So even though it might be overvalued, I'm not saying Universal Store is overvalued, just saying if it is overvalued, that can still lead to the share price rallying a little bit, but not always. One company I am interested in is Seven Group Holdings. So this has been a beautiful play since it broke out back in 1st December 2022. Beautiful, beautiful breakout. So there was a crossover, the moving averages, share price moved into an uptrend and just kept on rising. So you could have bought some shares in this company probably 1 month after the breakout at about $20, and now it's doubled since then. Now, the reason I like this one is the share price moved into this short-term downtrend portrayed by this downward sloping dashed line. So you can see it perfectly. Whenever the share price hit that up downtrend line, it fell back until the company released their results. Again, company released their results on the 14th of August. I'm pretty sure it was on that day. Share price popped up 6.76% on that day and moved above the downtrend line. Now, it struggled. It took a while to remain above that line, because you can see a few days later, it dropped below the downtrend line. So that was a false, I wouldn't call it a false, but it was, I would say it's a test of the fortitude of the bulls in this case. And then the share price of Seven Group has increased the last 8-9 trading days. In fact, that was not on the weekday we saw the overall weakness in the market. That was the 5th of August. This was the 19th of August. So this actually does look pretty good. And coming back to value, if I remember correctly, the valuation of this company is not that stretched. Actually, I lied, 32.89. I thought it was quite low. For some reason, I thought it was much lower than... It was much lower. It says here, according to this, profit was 464. The last 2 years it was between 550 and 600. So if you take profit about 600 million, the P ratio of this company is still above 20. Okay, I lied. I thought, for some reason, I thought the P ratio of this company was like 15. But there you go. But an interesting looking chart, and it has broken out of the downward trend. I think maybe another company has done that as well. Maybe. Oh, yeah, maybe. I don't know. Incitec Pivot, this is another one that is starting to look interesting. So again, we have 4 crossovers in the moving average. So we are talking about sort of a fight between the bears and the bulls during this period. So this is between late May and early August. Share price really not doing much. Bit of volatility, not a lot of volatility, but going up and down, crossovers in the moving averages after a long period of the share price in a downtrend. So share price moved into downtrend back in February 2023. So we are talking about over a year where the share price was in a downtrend. Now it's looking like, just looking like, the share price is wanting to move into an uptrend. So this could be the early stages of a new uptrend in a company, possibly. Now, the only little problem, this share price in this company also went on a bit of a rally back in May, and the share price has not got above that level. But I'm actually willing to discount that little rally. The one thing I'd like to see is a little bit better volume. Now, I would not call Incitec Pivot a high-quality company. So, and the other thing I should look at is it has a PE ratio of 101.36. So let's ignore that. I'm just going to go back in time just to see what sort of profit this company might have in a normal year. So it's all over the place. There's one year it had a profit of $1 billion, but in 1919, 2019, 2020, and 2021, the profit was between 100 and 150 million, and the market cap of this company is 5.8 billion. So that would suggest this company does have a large PE ratio right now. But the chart looks interesting for me. Looks like it's wanting to move into an uptrend. So maybe there is some good news ahead for Incitec Pivot, and the market is getting ready for that good news. Okay, so let's have a look at a negative chart. Clover Corporation. And this is a company who shares price has seen numerous consolidation periods. So when you do see a consolidation period, the share price, when it breaks up, breaks up, it can also break it down. And in fact, Clover Corporation has seen that happen 3 times in a row. So if you go back to between late 2022 and mid 2023, share price of Clover Corporation was going sideways. There was a little bit of a rally in February 2023, probably on the back of their results. Don't know. But the share price then settled back into that consolidation period. And then all of a sudden, the share price started to drop back in July. That was sort of the breakout of this consolidation period, and it was a negative one, breakdown, and the share price just kept on dropping. Not sure if there was any bad news in that, maybe just negative sentiment driving the share price down. Maybe the market knew this company would not be performing for the financial year, and share price just kept on dropping. There was another little shorter consolidation period between late 2023 and March 2024. And again, what happened for the share price to break out of that consolidation period? Negative results. I'm assuming they released results in March 2024 because the share price dropped 23%. Might have been a negative trading update, don't know. So a breakdown of that shorter consolidation period, negative results. And then the share price went sideways again. So after the share price dropping 4 days in a row, then the share price went sideways. Another consolidation period. So this could be just a consolidation period in the longer term uptrend. That's what I think is happening here. The share price of this company has been in a long-term downtrend, and during this downtrend, share price has been consolidating, going sideways. And then all of a sudden, just notice this, all of a sudden, not just now, the whole reason this company is in this video is because all of a sudden, even though the share price has been going sideways for about April, 4 to 5 months, all of a sudden the share price has just taken a big dip on larger volume. So if you look at the weekly chart, share price going sideways, and then all of a sudden, 3 weeks in a row, share price has nosedived, down 6%, and then down 14.4% in the last week on higher volume. That's a negative sign for Clover Corporation. So I'm assuming they released their results in March and September. I could be wrong. I'm just going to confirm that. Clover Corporation, March and September. Let's have a look at the 1 year. Yep, they released their half-year results in March. I think what's happening here is the market is a little bit wary, skeptical about this company's results in September, and they are selling ahead of the release of the results. So let's have a look. Well, not now. We'll see if the market is right when the company does release their results. Now, this company is much smaller than it used to be. Markup 64 million. According to TradingView, it has a dividend yield. I'm not sure if that's going to be correct. And I would assume that the results for this company are going to be quite weak. Otherwise, there might be value. See value. There might be value. Now onto one I've missed. Well, I didn't miss it. I just didn't play it. Catalyst Metals. This is a beautiful chart. And the share price of this company broke out on the 10th of July. Well, there was a sort of a breakout before the main breakout. Share price, well, I wouldn't call it a breakout. So the share price of this company moved into an uptrend in May. You can just see it playing out here. Crossover the moving averages, a higher high, higher low. And then I think the market expected some good numbers from this company's Appendix 4B or quarter results. That happened on the 10th of July. Share price on that day rose 23%. And I thought, ooh, this could be a breakout. And maybe I should take a position. And I went, oh, just see if the share price pulls back. And if the share price pulls back, I'll take a position. It never pulled back. Just kept on going higher. And it just hasn't stopped. Just keeps on going higher and higher and higher. A beautiful looking chart for Catalyst Metals. I'm pretty sure they released their results, and the results were pretty good. They were profitable, cash flow positive, operating cash flow positive. I could be mistaken. Maiden profit for Catalyst. There it is. Maiden profit for Catalyst. So whenever a company releases that, I think the market's going to like it. And that's exactly what you see here. Beautiful looking chart for Catalyst Metals. And this is one I didn't miss. I just did not play it. But there's a lot of opportunities on the market. So when you do have an opportunity that you do miss, just realize there's a lot of opportunities out there. Okay, 3 more to go. Australian Ethical Funds. Oh, this is the one that was similar to Seven West Holdings. So share price of Australian Ethical Funds or investment in a downtrend, portrayed by the sloping dashed line. And it just played the ball, played as it should. It respected the downtrend. That's probably the best way to say it. It respected the downtrend. But whenever the share price of this company met this downtrend, it fell away. It happened numerous times. 1, 2, 3, 4, 5, 6 times. The last time was on the 22nd of August. The share price hit the downtrend on that day, and then the next 3 days fell off. In fact, 4 days fell off. Then the company released their results. And if I remember correctly, the profit of this company grew 70%. I did have a very quick look. Let's have a look. That's 60%. I'm going to say 60%. 70% sounds a little bit too strong. Was it 57%? It's got UPAT, underlying profit after tax, up 57%. We'll go with that, 57%. Yeah, it was a pretty good result. And look what happened. Share price popped up on that day. There was a little bit of selling, which is understandable. Nice volume. Share price popped up 6.23% on that day. And the whole reason there's going to be a little bit of selling is because the share price has been significantly higher in the past. So there's going to be a lot of shareholders who want to get out of this dog stock. I'll call them traders who want to get out of this dog stock. The good sign, though, is the next day, the share price went up 1.5%. On lower volume, but there is a possibility that many of those who want to sell out have already sold out. So this could be a break of the downtrend for Australian ethical investments. Doesn't mean the share price will be moving into an uptrend now, but for instance, it could move sideways for a while. So this is just an end to the downtrend for Australian ethical investments. I am almost at the point of calling it. Yes, almost at the point of calling it the end of the downtrend for this company. Not a long downtrend. It only lasted, sort of moved into the downtrend probably 6 months ago. Yeah, so not that long of a downtrend. Solvar, I'm looking at this one very closely. It used to be called Money 3, I think. Money 3. They did release their results. They released their results on the 20th of August. Initially, there was a really bad reaction to it. Share price on the day fell 7%. In fact, the share price fell to about $1.07. Share price now $1.28. So when you see the share price fall like this, and then there was an instant recovery, that's actually a good sign moving forward. So there must have been something that portions of the market must have perceived something negative in the results. And I think the other portions of the market said, "Ooh, you are wrong. That's short-sighted. Maybe you're being narrow-minded, but there's more positives than you think in the report." I have no idea because I haven't had a look at it. Anyway, but that's what I thought, just based off the market reaction. It's all about based off psychology, that sort of thing. And the main thing is, after they release the results, share price has rallied. And the other thing is, the chart's starting to look really interesting. Share price of this company has been in a downtrend for a long time. So moved into downtrend in early 2022. Share price at that point was $3 and we'll say 10 cents. Share price now $1.28. This is the first time since then the chart for this company is looking enticing. And I would say, I haven't even had a look at it, the valuation of this company. I would say this company more than likely is probably good value. And the reason I would say that, I don't think the company was overvalued back in 2021, 2022. So what I'm going to do is just have a look at the profit this company made back in 2021. No, between 2021 and 2022. So this company had profits ranging between 22 and 51 million, had 47 million profit in 2023, and profit fell to 17 million. So if you go back to prior to that weakness, financial year 24, so this company had profits, we'll say, I could expect maybe the profit of this company to be maybe 40 million. And the market cap of this company is 266. So we are talking about a PE ratio of 6 to 7. If they can get their profit back up to those levels, which may be a big if. But I think if you look at, or just view this as a risk reward, there's definitely a possibility the share price of this company could go on a significant run, particularly if the worst is over. So this is why I'm interested in Solvar, because possibly the worst is over and the share price of this company could go on a run where the share price goes from $1.28 to back up to $3. There is that possibility at play for Solvar. And the chart is looking really good as well. Don't know if the dividend yield is right, 7.81%. But again, if the share price rallies quite a bit and you also get a dividend yield on top of that, ooh, that's nice. Nice returns in maybe 1 or 2 years. So that's Solvar. Very interested in taking position in that company. Haven't decided yet. Now onto a company I've never heard. Well, yeah, I've never heard of this company before. GDI Property. So obviously they're in property. It's not a small company. I had a very quick look at the market cap. It was actually 359. So some people might say that's a small cap. I suppose it does satisfy the small cap criteria. For me, that's not small. If I owned a company that was valued at 359 million, I would not call that small. I understand they need definitions, that sort of thing, but 359 million is not small in my opinion. So it's a property company. Property owner and fund manager. There you go. But I've never had a look at this company. So what drew me to GDI Property Group was the chart, just like Solvar. So share price of this company in a downtrend, or this fund manager, in a downtrend for a long period of time. In fact, it looks fairly similar to Solvar, doesn't it? Let's have a look at the difference between the two. Oh, it's not identical, but they both move into downtrend within a few months of each other, and long-term downtrend since then, and they're both showing signs of the share price turning around. So this is the sort of chart I am looking for, always looking for these type of charts. So I'd say the bottom has been reached. For some reason, I've been putting lines in this chart for ages. I don't know, I've never had a look at this company, but obviously I've been doing that because I've been putting lines everywhere. And that's Solvar. Oh, I was going to say, GDI, no lines here because I've, I've I was a little surprised there was lines. I thought there was lines because I thought I've never had a look at this company before. In fact, is this company? Oh, this company would be in my real estate watch list. Yeah, buildings watch list for some reason. And I have now in my breakout watch list and my video technical watch list because I'm talking about it right now. This looks interesting. Did they release the results? I'm assuming they did. There we are. Results on the 26th of August. 38-page presentation. Might have a look at it later. But maybe I don't have to. Just play the chart. Anyway, that's all I have for you today. Hope you've had a great Father's Day if you are a father. If you are not a father and you do have a father, hope you have spoiled your father rotten. I will give my father a phone call later in the day. I'm not a big anniversary holiday sort of person. I, in fact, prefer to work on holidays, particularly if it's a public holiday, because you get paid a fair bit of money. Anyway, that's what I have to say for this particular video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.